Hello and welcome to this video on how to identify entry and exit points in algo trading. Introduction. In the world of finance, trading algorithms have revolutionized the way we approach investment strategies. Algo trading, short for algorithmic trading, involves the use of computer programs to execute trades based on predefined conditions. One crucial aspect of successful algo trading is the ability to identify optimal entry and exit points in the market. In this article, we will explore various techniques and examples to help you improve your ability to pinpoint these crucial moments. Understanding entry and exit points. Before diving into the techniques, let's clarify what we mean by entry and exit points in algo trading. An entry point refers to the moment when a trader initiates a position in a specific security or asset. This could be the purchase of stocks, commodities, or any other tradable instrument. On the other hand, an exit point represents the moment when a trader closes their position, either by selling the acquired assets or exiting a short position. Identifying the optimal entry and exit points is a fundamental skill for successful trading. It allows traders to enter positions at favorable prices and capture profits by exiting at the right time. In the context of algo trading, this process can be automated using various technical indicators and strategies. Technical indicators for identifying entry points. Technical indicators are widely used in algo trading to identify potential entry points based on historical price patterns and market trends. Here are a few key indicators. First, moving averages, MA. Moving averages smooth out price fluctuations over a specified period, providing traders with a clearer view of the underlying trend. The two commonly used moving averages are the simple moving average, SMA, and the exponential moving average, EMA. Traders often look for instances where the shorter-term moving average crosses above or below the longer-term moving average as potential entry points. Second, Relative Strength Index, RSI. The RSI is a momentum oscillator that measures the speed and change of price movements. It ranges from 0 to 100 and helps traders identify overbought and oversold conditions. Values above 70 indicate overbought, while values below 30 suggest oversold conditions. Traders may consider entering a trade when the RSI indicates a reversal from these extreme levels. Third, Bollinger Bands. Bollinger Bands consist of a moving average, typically the 20-day SMA, and two standard deviation lines plotted above and below the moving average. These bands provide a visual representation of price volatility. When the price reaches the upper band, it may indicate an overbought condition, while reaching the lower band may signal an oversold condition. Traders can utilize Bollinger Bands to identify potential entry points when the price rebounds from these levels. Strategies for identifying exit points. Determining the right time to exit a position is equally important as identifying the entry point. Here are a few strategies commonly used to identify exit points in algo trading. First, profit targets and stop-loss orders. Establishing profit targets and setting stop-loss orders is a popular strategy among traders. A profit target defines the desired level of profit, at which the trader automatically exits the position. Conversely, a stop-loss order sets a predefined price level at which the trader exits to limit potential losses. By setting these orders in advance, traders can protect their gains and minimize losses. Second, trailing stop orders. A trailing stop order is an advanced order type that allows traders to set a stop price that follows the market price at a specified distance. It locks in profits as the market price moves favorably, while providing protection if the price reverses. Trailing stop orders can be particularly useful during volatile market conditions when traditional profit targets may be harder to reach. Third, technical indicators, e.g., MACD, parabolic SAR. In addition to the indicators used for identifying entry points, traders often employ other technical indicators to determine exit points. The moving average convergence divergence, MACD, and parabolic SAR are examples of such indicators. The MACD measures the convergence and divergence of two moving averages and can signal potential trend reversals. The parabolic SAR is a trend-following indicator that helps identify potential exit points when the dots flip from below to above the price. Examples of entry and exit point identification. To illustrate the concepts discussed above, Let's consider a couple of examples showcasing the identification of entry and exit points using technical indicators. Example 1. Moving average crossover. Suppose we have a 50-day simple moving average, SMA, and a 200-day SMA plotted on a stock chart. If the 50-day SMA crosses above the 200-day SMA, it could signal a bullish trend and serve as a potential entry point. Conversely, if the 50-day SMA crosses below the 200-day SMA, it might indicate a bearish trend and a possible exit point. Example 2. Bollinger Band rebound. Let's assume we are monitoring a stock's price that has reached the lower Bollinger Band. If the price bounces back up after reaching this level, it could suggest a potential entry point. Conversely, if the price reaches the upper Bollinger Band and starts to decline, it might indicate an exit opportunity. Conclusion. Identifying optimal entry and exit points in algo trading is crucial for maximizing profits and minimizing losses. By utilizing a combination of technical indicators and strategies, traders can increase their chances of making successful trades. In this article, we explored some of the commonly used indicators and strategies for identifying these key points. Remember that successful algo trading requires continuous learning, adaptation, and testing of different techniques to find what works best for you. Thanks for watching. If you enjoyed this video, please hit the like button and subscribe to my channel for more content like this.